GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's seen more cycles than your laundromat. I'm your host, Jay Hamilton, and there's a bunch of questions on my mind right now. One is, will Bitcoin trade like digital gold in this cycle? We keep talking about the decoupling and it moving in that direction. Will it actually? What needs to happen? And what does that mean for price in this cycle? Also, Solana is becoming like AWS. These smart contract, programmable blockchain, Solana, Ethereum, they're starting to be viewed by institutions the same way that Amazon's web services is viewed by institutions. We're talking about why that is, what those metrics mean, and how that can help you as an investor think about the future of these blockchains. And then finally, if we have time, which I hope we will, we'll get to the final question, which is which stablecoin is going to win? The Genius Act has now passed through the Senate. What does it mean for decentralized versus centralized stablecoins, and which one is going to win in the short term and in the long term? We're going to discuss that. All of this is going to be discussed today with Hadley Stern, the Chief Commercial Officer for Marinade Finance, one of the leading liquid staking platforms on Solana that is really leading the charge for institutions to start to understand staking and help them capitalize on their SOL asset. Before we jump in, I've got to let you guys know the Milk Road team continues to cook, and we have a very exciting new addition to the Milk Road universe. I'm talking about Milk Road Degen, our new newsletter and podcast to get you into the trenches. If you want to gamble and spend a little bit more time down in the crypto casino, you got to check out Milk Road Degen. Check out the link in the show notes to learn more. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Nexo, the platform that grows your crypto without locking it away. Without further ado, Hadley, welcome to the Milk Road Show.
Thank you. Great to be here with you and your listeners today.
Thanks, Hadley. It's great to have you. And thanks for joining in last minute from, I know you're at permissionless, and we got you on the show just last minute today. So I appreciate you making the time for us. Let's start with Bitcoin. I mean, you can't deny Bitcoin's the big daddy in the room, and every show that we do, we have to talk a little bit about Bitcoin. The conversation that's going around right now is, will Bitcoin trade like digital gold? We all know in crypto and use the comparison that Bitcoin is digital gold, but then sometimes it doesn't trade that way. And we got that example most recently with the Iran war, and the escalation of that led Bitcoin to act a little bit more like a tech stock and see a sell-off. Do you think that Bitcoin trades like digital gold in this cycle?
I don't think it does. I mean, I think the data shows that it doesn't, as you just indicated an example. And we've seen this for some time now where, there's been a hope that it would be an uncorrelated asset. And it just doesn't appear to behave that way. And it's hard to say why. I heard some wild theories that maybe this sell-off was, Iran holding some Bitcoin and wanting to sell it off to fund some nefarious activities. So, you never know with Bitcoin. But I think what is clear is that it's not behaving that way in these short-term blips. That said, over the longer-term time horizon, it does appear to be playing that way in terms of, the idea of Bitcoin being digital gold is this scarcity hypothesis. And if you look at the Bitcoin price at the same day, year over year, it's going up as a trend broadly, and it's going up uncorrelated to the market. So I think what we're seeing is a mix of kind of a yes and no, where in some short-term cases, it's not behaving like digital gold, but in the longer-term pattern, it is.
You were at Fidelity when Fidelity first started thinking about investing in Bitcoin and in blockchain. What were the early conversations like there? Because that's the tip of the spear in terms of the movement that needs to happen for Bitcoin to start to be understood and to be understood by the masses the way we need to. Talk to us a bit about those early days at Fidelity and what that was like, and just sort of frame in our mind maybe what time frame that was in.
Sure, yeah. So dating myself a little, this was 2014. And what's interesting is you asked the question around digital gold. The hypothesis of Bitcoin really is how we were reviewing it in 2014 was not digital gold. It's really Satoshi's original vision as a payment system and a bankless currency. So a lot of our first experiments, and this is public information, were things like enabling people to pay for their food in the Fidelity cafeteria with Bitcoin, because we wanted to understand how it worked as a payment vehicle.
As payment.
Or, another fun experiment was we had people go and buy something on Overstock, because Overstock was an early, and see what that experience was like. So that's one of the things I find interesting about the long-term shift of Bitcoin from, it appears like Bitcoiners have kind of given up. There's still some people trying to figure out Lightning, but the Lightning network has never really, worked from a user experience standpoint. And instead, you've seen this, you talked about stablecoins, you've seen stablecoins really disrupting the idea of Bitcoin as a payment vehicle. So I'd say that, it's kind of funny to look back, but we weren't really thinking about it as digital gold. We were thinking that it would continue to have value and that it would grow in value, but that was primarily based on the idea that it would have real utility.
And we'll talk about stablecoins later, but I did a show this morning where we were chatting about, long term, what do you think is the biggest use case for blockchain? And I think right now it's between Bitcoin and stablecoins. It feels like those are the two runaways so far. Now, obviously, I believe in innovation, and I think there could be something I don't even think about yet or don't even know about yet. But we were talking about how stablecoins really could be the ones that win long term, because it has such a large use case that if Bitcoin really is only digital gold, and look, I'm not downplaying the enormous potential of Bitcoin by any means, more so just pointing out the unlimited potential of stablecoins.
Yeah, I think to answer your question, I would say stablecoins are just the beginning. And so what are stablecoins? They are a blockchain record of a real world asset, in this case, cash. So what happens anytime USDC mints a new dollar? They take that dollar token and they deliver it to you in the form of say a Solana token. And at the same time, they deposit $1. It just so happens to be in another former of an employer of mine, Bank of New York Mellon. So a stable coin is really a real world asset. Well, what other real world assets are there? Stocks, equities, bonds. There are, that are ripe to be made better, faster, cheaper on the blockchain, and other real world assets like real estate and all types of things. So I would say we're at the very beginning of a cycle of blockchain being used as a technology that changes in many ways the all types of assets and the way they move through the world.
Mm-hmm. Yeah, tokenization or RWAs is certainly a trend that is growing, but is still very small and still
it's incredibly nascent. It's incredibly early. But look at what happened with stablecoins. I think I read on Cointelegraph 3% of the US dollar is now minted on stablecoins. That's kind of unbelievable.
It is.
Someone else put it like, I don't know if you've ever been to LA, but there's a lot of Teslas. It's like if you look at LA and imagine every Tesla is a stable coin and every old car is cash, that's what the world we're looking at. So it's like it's starting. So, and cash is an easier thing to tackle from a regulatory and compliance standpoint than, say, Apple stock. So it kind of makes sense that it started there. But once the cat is out of the bag, it's going to be used for all types of things.
Mm-hmm. Okay, let's come back to Bitcoin for a second.
Sure.
When you look at Bitcoin in this cycle, hovering around 100,000 right now in terms of price, where do you think we could see Bitcoin go in this cycle?
First of all, I'm sick of 100K parties. It's like, don't need to party that much day in, day out. So hopefully we'll pass that. It feels to me like this cycle is going to top out at something like 160, and then we'll probably settle back down into the 120 range. I think we have to break. We human beings are so interesting. We anchor ourselves on these numbers. And I remember, again, to age myself in this industry, I remember when 10,000 was a long way off for a long time. And then we hit it, and then it kind of stayed there and then went down and stayed. And it's kind of what's going on with the 100K mark, where we break it, but we don't really break it. My feeling is that there's room in this cycle for a break from the 100K psychological hold to something like 160. And then it will sort of settle down and be prepared for the next cycle after that.
It's interesting because the predictions that we get on the show, and I always ask people for predictions, and everybody's always hesitant to give them because, let's be honest, this is not financial advice. Everybody should do your own research. Like, making predictions like this is it's difficult, and it's not as scientific as we might like it to be. Yeah. But your 160 prediction is quite low compared to most of the predictions that we're getting. Most of the predictions everything seems to fall in the like 150 to 250 range. And then I would say, and then there's like the absolute maxis who are, I don't know, anywhere from like 300,000 to a million Bitcoin. I've literally had a million. Adam Back came on the podcast a while ago and he predicted 500,000. So, but the where it makes sense to me is in this 150 to 250 range. So I feel like you're at the lower end of the range, but you're still, it doesn't mean that you're not bullish and not excited and don't believe strongly. I
consider that not bullish. Maybe it's the TradFi guy in me that hasn't been beaten out yet. That's a little more bearish. That's a possibility. I consider 160, for this cycle to be really good. Bitcoin, it's a tough thing. It's so much, the fear and greed index and emotion. So it's a very tough thing to quantify. It does feel like with all the buying motion, 6% of Bitcoin is now owned by ETFs. And then you add on MicroStrategy to that as an incredible buyer. It does feel like there should be more buying pressure that would affect price. So it's a very curious kind of phenomenon. So 160 I consider conservative. In my mind, I certainly can also see 200,000 as well.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Let's talk about Solana. So the case for Bitcoin, is pretty clear. I think that everybody listening to this feels strongly about where Bitcoin's going and has a large portion of their assets in that. The rest of the crypto world, altcoins, everything else is more difficult to predict, particularly in this cycle, right? It's been, yes, Solana has had its moment in the sun, but that's only because Solana was so low post FTX when it got down to what was it, $8. Okay, it's up a lot since there, but if it wasn't for that, Solana might not also have had the run when you look at other altcoins like Ethereum, which are really basically flat over the past several years. When you look at Solana,
it's only flat. I think if you correlate it to Bitcoin, it's a pretty damning proposition.
Yeah, completely. When you look at Solana, how are you thinking about Solana right now? And I know you speak to a lot of institutions and are working with institutions on their adoption of Solana and various assets. How do they think about Solana?
Yes, I'd say there's three things to discuss. One is two-part, how to break down Solana from a quantitative and qualitative aspect. And then the third piece, which is what Marinade specializes in, is Solana staking and how that fits into the investment hypothesis. So one of the great things about blockchains is, from a quantitative standpoint, there's a tremendous amount of data. So Solana is by far the most used chain right now. It accrues the most in terms of fees. So all the sort of metrics that you would want to see in terms of blockchain health, blockchain utility, and blockchain economics are open and for any investor to take a look at. So one way that I would look at something like Solana is the quantitative elements of the chain. The other is qualitative. And so, and this is where, you know, if you don't look deeply enough, you could dismiss Solana as a meme chain. And that's a fair comment given the past year's activity, although it's settled down, where a lot of that economic value that I talked about was accrued from memes. But the way that I look at memes as a phenomenon on Solana is I look at it like they could only happen on Solana. And why is that? Because the chain is fast enough and cheap enough for something like that to happen. And so when we talk about looping back to our conversation around real world assets on chain, if you're thinking of NASDAQ on chain, Solana is the place where it's going to happen. And there's already TradFi companies building tokenization products, Societe Generale, BlackRock, Franklin Templeton, and others on Solana. And they're doing it because it has that throughput, and it's the only L1 chain that really has it. One interesting data point around this was the day that the Trump coin was released, and I'm not going to get into the validity of our president having a meme coin. I'm going to stay away from that. But the Solana blockchain basically did 10% of the NASDAQ volume without a hiccup. Some of the DEXs were a little slow. So as an investor, those are the types of things you should be looking at when you look at a chain: the data underlying it, how it functions, and then qualitatively, who are the people building on it? Who are the people using it? So that's the two ways to think about Solana from an investment standpoint. The third piece.
Before you jump into the third piece, when you look at the quantitative, or when you consider the quantitative side, do institutions understand that in your view? Like, I wonder how much they do.
More sophisticated ones do, yes.
Okay.
And, a lot of, certainly a place like Fidelity does. It's probably literally 1,000 people who are dedicated to crypto at Fidelity because of all the businesses that they run. So they're deep in it. But yeah, I wouldn't say all of them. There's some that don't. And there are some that are like, what's Bitcoin? Although that's pretty unusual. But there are emerging ones that do, and a higher level of sophistication, and starting to look at this space that way. And so that gets to the opening comment around viewing something like Solana as a tech platform akin to AWS versus this digital store of value like Bitcoin, because people build applications on top of Solana. They build as centralized applications, but there are also decentralized examples like the Helium network, which is a very interesting cloud-based phone provider building on top of Solana. These are real use cases for the technology. So yes, they are. So the third piece that you think about when you think about investing in something like Solana is, if you believe those quantitative and qualitative elements are going to lead to future price growth, if you have Solana, you should stake it. And if you stake it, you should stake it at Marinade, which I can talk a little bit about. But the most important thing is that you should stake it, because the yield right now is anywhere from 7 to 10%. So basically, if you don't stake it, you're giving up that yield. And when you stake it through someone like Marinade, we take that Solana and distribute it to the most highly performant validators. So this is where it's kind of if you were to use the TradFi analogy, it's kind of like an equity with a really nice dividend that makes it very appealing. So those are the three ways that I would slice something like Solana.
And we're all waiting for the Solana ETF to come. It feels like it's the next big ETF. I mean, there's a whole bunch of crypto ETFs that are coming, so it's not just Solana. What are your thoughts on when will that get approved? And do you see there being a large amount of inflows that come from that getting approved? Because I think we all remember the Ethereum ETF and how much hype there was around that. And then last summer when it launched, it was quite a flop and didn't have a lot of inflows. Not initially. Now that might have been market conditions last summer were also not the greatest. But what are your thoughts on the Solana ETF?
Yeah, or it could relate to the third piece that I talked about, staking. So I believe the numbers are, there's about 10% tied up in ETH ETFs versus Bitcoin. But don't quote me on that. That's an approximate number. But the question is, how much of that is because the Ethereum ETFs were only approved if staking was removed? Now in Ethereum, you're giving up 2 to 3%, so maybe it's not that critical, but still, if you're even a little bit savvy, are you going to give up? I doubt any of your listeners are going to be like, oh, I'll just give up on 3%, and that's that. So it's a question with Ethereum. I think interest in Solana has been strong, partly because the Solana story out there from the pieces that I talked about, the proof points of actual utility and usage. And then, of course, the higher yield is just an absolute sweetener. So I would expect demand for a Solana ETF to be stronger. Plus, Ethereum, it's just in general been having a really hard time as a protocol. Most of Ethereum only really functions because of the L2s. And when you're buying an Ethereum ETF, are you really capturing any of the value? So I wonder how much of it just has to do with Ethereum having some struggles generally versus not being Bitcoin.
You brought up staking in the ETFs. Do you think that, when do you think that happens? Because I think that is a very likely thing to happen at some point, would be that the ETFs would enable staking, whereas right now the Ethereum ETF does not.
Absolutely. And where the Ethereum ETFs do not. So first, and I'm engaged as at Marinade, we're members of the Proof of Stake Alliance, which is actually a lobbying group for the staking industry. Yes, such a thing exists. It's a wonderful world. We're down in DC talking a lot to senators and Congress people, and also the SEC about this. I would anticipate, so I'll give a sunny day scenario and then a rainy day scenario. A sunny day scenario would be August. A rainy day scenario would be early Q1 next year, with probably a realistic scenario like Q3, Q4. That's when I see approval for staking ETFs coming for Ethereum and Solana.
Okay. And when that happens, which way do you think people will go? Will it be better to hold Solana and stake the traditional way, or will there be benefits to different structure to the way it's done in the ETFs?
You have to remember that a lot of the ETF for retail investors is about being able to use assets that you can't use to invest in crypto. So in the US, if you have a rollover IRA, for example, you can't buy Bitcoin directly. Until the ETFs, you could buy GBTC as a closed fund. And now with the ETFs, if I have assets in a rollover IRA, I can suddenly buy a Bitcoin ETF and give exposure to Bitcoin. So a lot of this has to do, it's a combination of factors. It's the appeal of the underlying product itself, and then it's a distribution factor that I can use different types of assets to give myself exposure to crypto assets. And I believe that there is a lot of money, people do have a lot of money in those types of accounts, that once there's a Solana ETF, they'll be happy to point some of that towards those products.
Especially if there's staking involved.
There has to be for Solana. I mean, I think for Ethereum, you can kind of maybe get away with it. But, with Solana, it's very hard to imagine an investor walking away, even for assets that they can invest elsewhere, walking away. And that's how all the conversations, we've moved beyond the should there be staking in ETFs to how do we do it and how do we get it done. And, I've been involved with the regulatory conversation for also a long time now. And there was a notable shift with this new administration in the level of conversations and, desire to do things sensibly and get it done.
Speaking about a noticeable shift, one of the biggest achievements that we've had so far is the Genius Act that is coming. It's passed through the Senate last week and is creating a lot of great energy and a lot of great momentum for crypto, because we're finally seeing legislation, which we've all wanted for so long. When you look at the Genius Act, it certainly calls into a bit of a battle, centralized versus decentralized stablecoins. How do you think about how this will play out, and which stablecoins you think might win, or which stablecoins you think are set up to succeed as a result of the Genius Act?
Yeah, I think what's so interesting about this is unintended consequences, right? So we finally get in an administration that's willing to play ball. However, we now see a lot of centralized entities that are ostensibly crypto, but not really, being the ones leading that playing ball. And for that reason, self-interest occurs. And so I'm concerned about the Genius Act. I'm concerned about other elements of crypto moving towards this more centralized future. I mentioned earlier, 6% of Bitcoin is tied up in ETFs. Most of that Bitcoin is tied up in one custodian. And, I can't imagine Satoshi thinking that way. You have other examples, Coinbase announcing Shopify integration of USDC, but oh, by the way, it's only on Base. So I think what you're starting to see, which is natural, is, corporations and now 2 public companies, Circle and Coinbase, representing shareholder interests, which can be in conflict with the ethos of decentralization. So on the one hand, it's a good step. On the other hand, it's a bit of a bitter pill to swallow in terms of the ethos of decentralization. That said, I understand, because these are heady challenges to solve around, KYC, anti-money laundering, all types of things that are very complicated. So I don't envy the regulators, and I don't envy the lawmakers' position, but it's complicated.
When you say you're concerned about the Genius Act, do your concerns go further than what you're mentioning now around the opportunities for centralization?
No, not really. I think it's more along that front. And, have we limited it so much that it's really CeFi, not DeFi. So it's centralized finance riding the rails of open blockchains, but it's not really DeFi. And so, what are we limiting from an innovation standpoint? What are we limiting from a competition standpoint? I mean, stablecoins were incredible innovation. They originally served the use case for, back in the day, if you were on something like Polo at the early exchange, you couldn't have a cash position. So, and you couldn't bring cash in. So that was really the origin of that. So it was a very DeFi thing to solve. It wasn't about, sending remittances abroad or doing buying stuff from Shopify. It had a DeFi ethos to it. So that's what I'm concerned about.
Yeah, it'll be very interesting to watch what happens with stablecoins over the next, even in the short term, because I think the Genius Act obviously is a major milestone that's getting a lot of attention, but then also Circle IPOing to the success that it IPO'd has attracted Wall Street in a way that I don't think anybody predicted necessarily, certainly not the iBankers that set the price of Circle when they IPO'd.
No, I mean, it's incredible to see Circle's performance versus Coinbase's IPO.
Yeah.
And then you have to wonder how much of decentralized value is accruing in TradFi. Like where, all that money that's going to Circle, what would that look like in a tokenized world, in a DeFi world? Now it's suddenly tied up in, we're like Back to the Future. We've like created this stable coin on DeFi rails, and we've wrapped this TradFi company around it with, so I'm not quite sure what we're doing.
Where do you think the opportunity is for investors? Is it to focus more on the stablecoins are a difficult thing to invest in as an investor, because the only one really that you can get direct exposure to is Circle, unless you want to go to some of the DeFi stablecoins, which do have tokens.
Yeah.
Athena, Sky, those.
Yeah, it's an interesting question. Like, if you wanted to invest in stablecoins, where would you go? I don't think you have many choices apart from the ones you mentioned. The other way that I look at stable coins is I think they're a great, getting back to the quantitative piece I was talking about, keeping an eye on what USDC, what's utilized between Ethereum, Avalanche, Solana is a great way to keep an eye on the metrics and health of these blockchain networks and actual utility. So maybe that's one place to go. But it's kind of maybe banks. You could buy some Bank of New York Mellon stock, because that's where the US dollar that Circle mints is treasured. I mean, I say it's sort of tongue in cheek, but it's true.
Yeah. I think you're the first one to recommend that. I haven't heard that idea.
Very, very, very degen here. Very degen.
Very degen. Okay. Before we wrap up, talk to us a little bit about staking on Marinade, and why you decided to join Marinade and build the next step in your career there. Coming from Fidelity, you obviously had a lot of options. What is it about Marinade and the products that you offer that you're so excited about?
I just think it's a fabulous example of a DeFi innovation. So Marinade started 4 years ago. I've been there almost a year. So I wasn't there at the beginning. And the problem that the team was solving then was helping support decentralization of Solana while allowing people to get the highest APY. So basically, when you stake with Solana, we take that stake and distribute it to over 100 validators. And on the other side of that, there's a stake auction marketplace where those validators bid for the right to receive stake. All this happens through a command line interface, smart contracts. We started with MSOL, a liquid staking token. We were the first LST on Solana. And the reason I joined was about 2 years ago, the company started getting a lot of inquiries from institutions around staking, and specifically native staking. So we launched native staking on Solana, which has some specific advantages over a liquid staking token. The first being no smart contract risk because there's no LST. And the second being that investors or stakers retain custody of their Solana in their Solana wallet due to the way that Solana is designed. So this is purpose-built for institutions, ETFs, high net worth, really anyone. Anyone can stake through Marinade Native or buy MSOL through our website, marinade.finance. We're also integrated with BitGo, Zodia, and Copper, and more integrations to come. And then the final innovation that we've just launched that's had some success is Marinade Select, which is, again, purpose-built for ETFs and other funds that want a select group of KYC'd and AML'd validators. There's about 30 of them participating there. So we have about $2 billion of total value locked up. One of the things I love about working for Marinade is going to conferences and meeting people. It was typically people's first exposure to Solana staking was Marinade, and people have a very, favorable memory of us. So we are Solana only, about 30 of us, which is unique, and that allows us to go deep and build some really great products for stakers and validators alike.
Mm-hmm, mm-hmm. And it strikes me that the big opportunity that Marinade is chasing is to be the staking provider to the ETF providers. Is that the big opportunity that you're really focused on?
Absolutely a market we're focused on. So we are part of one ETF filing, the Canary Marinade Solana ETF. So they selected us as their dedicated provider. And we're in conversations with others as well. But we're focused all the way from ETF all the way to the end retail user and everyone in between. We believe passionately that, going back to the ethos of decentralization, that it's very important that we not end up in a 4 or 5 validator situation. A lot of people just go to Coinbase and hit stake. The other part that they don't realize is they're losing yield. So we perform better because of our auction model than anyone else. So people can go to our site, marinade.finance, and there's a little selector where you can select our products and compare the return to all types of validators. And so it's about decentralization. It's also about providing the highest yield that you can get in the market.
Mm-hmm, mm-hmm. And to our listeners out there, if you have Solana or Ethereum or any of the many programmable blockchains that do offer staking, any of the proof of stake chains, then you should definitely be staking. And Marinade's obviously a great option for your Solana, so you should check them out. We'll link to you guys in the show notes. Hadley, really appreciate your time today. Thanks for joining us.
This was great. Thank you so much, Jay.
Thanks so much for listening in, everybody. I've got to remind you, as always, that none of today's episode was financial advice. I am not your financial advisor. Hadley is not your financial advisor. You should do your own research and always think before you make any investment decisions, because investing is risky and difficult. And if it was easy, then everyone would be a millionaire. But that's why you tune in every day to the Milk Road Show. We appreciate your time. And one more time, I got to tell you guys, the Milk Road team keeps on cooking. So check out Milk Road Degen. Make sure you check out Milk Road Macro as well, our other newsletter that we just launched about a month ago. And there's some more exciting stuff coming up. So keep an eye out. Thanks so much for listening in, everybody. Have a wicked awesome day. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.